Stocks on Wall Street and Monday's trading session mixed. The Dow Jones sheds more than 220 points while Nasdaq gains 110 points boosted by Amazon and other OpenAI stocks. Markets in Asia open mixed, breaking ranks from Wall Street's tech-led rally. Gift Nifty is indicating a muted start for the Indian market. Crude oil trades around $61 per barrel, holding steady even as traders assess OPEC Plus's decision to pause output increases next quarter. Gold prices also stabilize as investors shift the focus to the U.S. private payrolls data. In key earnings, Bharti Airtel beats estimates in the second quarter. Titan 2 reports a strong set of numbers in Q2 FY26. But a big day of earnings today as 5 Nifty companies, including SBI, M&M, Interglobe Aviation, report their Q2 numbers. For SBI, net interest margins is expected to see a dip, and M&M is likely to report a mixed quarter. And in the primary market, Groww's a 6,632 crore rupees IPO opens for subscription today, while Lenskart's 7,278 crore rupees IPO is set to close with an overall subscription at around 2 times. Hello, good morning. You've tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, in terms of the market and what are the important cues that we have from the global end, U.S. markets closed mixed. Let's look at what the Asian market is doing. That also seems like most of them have opened up in the green, but there are a few ones which are in the red. So a bit of a mixed opening. Taiwan index, 0.5% of gain there. Hang Seng is managing to hold on to gains of 0.4%. Nikkei has opened up with a mild gain of around 0.1%. Shanghai also is holding on to gains of 0.1%. What's not doing well? ASX 200, the Australian index, that is trading with cuts of almost 0.8% in today's trading session. So yes, that's where we're seeing some bit of a pressure coming in. Kospi, that's the Korean index, that's also seeing a bit of a decline in today's trading session. So a bit of a mixed opening is what has come in from the Asian markets. Nifty, Gift Nifty, what is the indication there? Seems like a bit of a muted to red start is what we're keeping an eye out on. 24 points down is what the Nifty implied open as of now is indicating for the Indian market. So that's what we'll be keeping an eye out on. Whether we're going to be seeing a bit of a red session or will this recover will be key. But as of now, Nifty implied open is down 24 points. But let's look at the overnight cues that we have coming in, and to set you up for trade also, we have a team of research as always joining in with us. Firstly, let's go across to Urma, who is there to tell us which are the important cues that we are keeping an eye out on today. Good morning, Urma.
Good morning, Vinny. And it's a very important session that lies before us today, and yesterday was no different. We had a very range-bound session, but the good part is that the Nifty ended close to the highest point of the day. The dip that came in earlier was bought into, but that's where the good part ends. The not so good part is the fact that for the last 4 sessions, the Nifty has been making lower highs and lower lows. And if you could see that, they have not been able to cross the previous day's highs now for the last 4 sessions. They could not do so last week. They're not able to do so in Monday's session as well. So that could be a bit of a dampener. But for the Nifty Bank, that was an outperformer in yesterday's session. The one good thing, it could not cross the previous day's highs, but it did manage to cross the previous day's lows. So that streak of lower lows was broken, but the lower highs are still to be broken. So that is important level, that 58,254 level for the Nifty Bank, which is last week's high, is an important one to watch out for going into today's session. The outperformance continues from the PSU banks, and out of the 12 constituents that the index has, 6 of them are trading at 52-week highs. Today is a very important day for the PSU bank index simply because SBI reports results today. That will give a trajectory for the PSU banks as well. For the index itself, the Monday's high, which was 25,803, that's the first important level to watch on the upside that it needs to cross. On the downside, the 25,650, 25,700 zone supports emerging from that level. So if there is any dip that comes in at the start, that will be an important level to watch out for on the downside. And today's session, as I mentioned, SBI, but apart from SBI, Mahindra and Mahindra, Adani Ports, Adani Enterprises, Indigo, more Nifty companies reporting results today. There are some very important broader market results as well for the likes of Paytm, Suzlon, Indian Hotels, Castrol, and a lot of other companies. Today, of course, being the weekly expiry of the Nifty contracts, we are also heading into a midweek holiday tomorrow. So we need to watch out for some profit taking potentially if it emerges in the final few minutes of the trading session. The primary market activity remains busy because Lenskart IPO, the final day, Groww IPO opens for subscription today. So it's a busy day for the markets, for the primary markets, on the earnings front as well. The GIFT Nifty for now indicating a slightly muted start, but some important levels to watch out for both on the upside and the downside.
Okay, important levels that we'll be keeping an eye out on. Thanks so much for that, Hormaz. But let's go across to Vivek, who's here to tell us which are the important stocks that we should be keeping an eye out on today. Good morning, Vivek.
Well, good morning. Largely dominated by earnings. Three key Nifty companies delivered results post-market hours. Bharti Airtel, while the results are largely in line with estimates, the ARPU is something that has come in quite strong. The ARPU has actually come in at 256 rupees versus just around 250 rupees on a sequential basis. Profitability, revenues, EBITDA, as well as margins, all healthy and a slight beat above what the CNBC TV18 poll was anticipating. Now coming to Power Grid, it's been a slightly muted quarter for the second straight quarter. Revenues, largely in line with what we were anticipating, but the EBITDA has fallen almost 6%. Margins too has seen a sharp contraction on a year-on-year basis. Higher other expenses as well as the decreasing share of profits in the JV is something that has impacted the earnings. Now Titan again largely in line with what the CNBC TV18 poll was anticipating. Revenues in fact above what we were anticipating, but have a look at the EBITDA as well as the EBITDA margins. That's been a miss, indicating that there was a higher share of lower margin products as far as the sales mix was concerned. Profitability too, slight miss to what we were anticipating. Now coming to Bharti Hexacom, revenue higher by 2.5%, profitability higher by 7.5%. The only concern over here is that there has been a subscriber share loss as far as Q2 is concerned. Now coming to Hitachi Energy, extremely strong set of numbers. Also margin guidance is something that they are, Street is hoping that the company will upgrade. So profitability is coming at close to 264 crore versus just around 50 crore on a year-on-year basis. Other results that will, or other stocks that will react to strong results, LGS Enterprises, TBO Tech, Gallant Ispat, Godfrey Phillips, City Union Bank, Acme Solar. On the other hand, a few laggards that you could expect in today's trading session. Have a look at Kirloskar Brothers, Arvind Smart Spaces, JK Paper. All of them are quite weak. Apart from that, keep an eye out on Hero Motor as well. The sales data indicating that there has been a dip on a year-on-year basis as far as two-wheeler sales are concerned.
Okay, Vivek, thank you so much for that. But let's move on. And to set you up for the last leg is the F&O space. That's going to be important as well. Good morning, Sudarshan. What are we keeping an eye out on here? And obviously, today is going to be the expiry as well.
That's correct. So it seems like that Nifty is in a congestion zone and the range is of 25,700 to 26,000. That's the range where we are seeing a heavy FI selling for the last few sessions. Continuously, we are seeing that FIs being on the sell side. Yesterday also in the cash market and in the derivative, FIs have sold. In the cash market, they have sold nearly 1,900 crore. And in the index futures too, they have sold almost 1,200 crore. Their long exposure remains around 16%, but they have added more short positions. Yesterday, they have added more than 6,500 contracts, while on the long side, addition was just around 370 contracts. In the options data also, you will see that on the call side, two options strike rates were active. That was 25,750 and 25,800, where we have seen maximum addition of the open interest, but at the same time, there was a fall in the premium. But on the put side, we have seen premium increasing for both 25,650 as well as 25,700. Support for Nifty remains around 25,530. That's a very important level, and resistance would be now 26,000. The hope is that Nifty gets back to the level around 26,000. For Nifty Bank, support would be 57,800. Yesterday, Nifty Bank was outperforming, and now resistance has moved higher to 58,600. That's the record high level. I'll keep an eye on two stocks. First one is Indus Towers, that has been seeing fresh longs after the SE's AGR order, and the second one is Voltas, that has been seeing fresh shorts.
Okay, Sudarshan, thank you so much for the update there. But, just moving on to the primary market, investment platform Groww is set to make a D-Suite debut, and the IPO of the company opens for subscription today. The company has set a price band of around 95 rupees to 100 rupees per share for its IPO. A day ahead of the IPO opening, the company has raised rupees 2,984 crores from anchor investors, including names like Abu Dhabi Investment Authority, Government of Singapore, and several domestic mutual funds too. Speaking to CNBC TV18 earlier, Groww's CEO Lalit said that the rise of the affluent customers is a big trend on the platform, and as the company aims to expand in India's wealth management opportunity, listen in to what he had to say.
We are building like India's largest wealth platform, and we have multiple businesses. Broking is of course the largest and the kind of the leader there, but that's how we look at it, right? Multiple products. So we are like building direct to customer multiple product company where customer has an option to kind of invest in any product that they want. We are kind of super excited about one big trend that we have seen is the rise of affluent customers on the platform. So we are democratizing investing in the country. But what happens is as customers spend more time on the platform, they get affluent category, so they need wealth management solutions. This growth of this affluent category is more than double the growth of the overall platform growth.
Okay, on that note, we're actually going to slip into a very short break. Don't go anywhere. After the break, we'll get you cues from Wall Street. Stay tuned in for that. Welcome back to Power Breakfast on CNBC TV 18. Now let's talk about the US markets, and Wall Street ended on a mixed note. The Dow Jones lost 226 points, while the S&P 500 added 12 points. Nasdaq closed with gains of 110 points as well. We have CNBC's Kate Rogers joining in with us to give us a wrap on what happened on Wall Street.
U.S. markets were mixed across the major averages in Monday's trading as tech investors rotated back into the AI trade. The Dow lost 226 points. The S&P 500 added 12. The tech-heavy Nasdaq gained 110. Amazon shares were up 5% Monday after OpenAI announced a partnership with AWS, Amazon's cloud unit, for $38 billion of capacity, which will also utilize NVIDIA chips. Until recently, Microsoft had been OpenAI's exclusive cloud provider. According to the companies, the first phase of the deal will use existing AWS data centers, and Amazon will eventually build out additional infrastructure for OpenAI. And iconic brands, including Kleenex and Huggies, are coming together with Band-Aids and Tylenol. Shares of Tylenol maker Kenvue soaring 15% Monday after agreeing to be acquired by Kimberly-Clark for nearly $49 billion in cash and stock. Kimberly-Clark stock moving in the other direction. It was down 13% on the news. Kenvue was originally spun out from Johnson & Johnson in 2023, but shares are down almost 35% since then. That's what's happening here in the U.S. Back to you in Mumbai.
Thanks so much for that. But following the Fed Chair Jerome Powell's announcement on rate cuts, Mohammad Al-Arian of Alliance Chief Economic Advisor there discusses the central bank's interest rate decision and the economic outlook. Let's listen in.
So it was very clear that there are major divisions within the FOMC, and we've heard since the extent of those divisions. They relate to whether you worry more about inflation or you worry more about unemployment. The second issue that's clear is that there's different views as to what you do under uncertainty. And the uncertainty comes from the lack of federal data. Some people feel that you slow down and therefore you should stay on hold. Other people say, no, the destination is the same. We should continue going towards lower rates. That is not going to be resolved unless the Fed takes a strategic view of the economy. We should not get in the way of this continued strong growth because it offers a solution to a lot of other things in the economy. And we just have to get used to something you've heard me say, which is that inflation is going to stick around to 2.5% to 3% for a while. And that's okay because it's stable. The most important thing is stable inflation, and we've seen inflation expectations haven't been de-anchored. The longer-term investor base, while it's growing, is not big enough to deal with the ups and downs of speculation. Very different than what we're seeing in the gold market, which is stabilizing. So, what you're seeing is the structural setup of different markets. Crypto, looking forward, will continue to increase the institutional base, the more stable base, what I call resident investors. But you have a lot of tourist investors in the market right now, and that's what you're picking up.
Okay, that's the update there from the global front, but we're going to slip into a very short break. But as we slip into the break, here's a programming note for our viewers. It is the final countdown for CNBC TV 18's most anticipated event of the year, the CNBC TV 18 Global Leadership Summit. The landmark event brings together business leaders, innovators, and policymakers to explore transformative strategies and groundbreaking ideas starting at 8:30 a.m. on 7th of November. It will be a power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more. Tell us why you love CNBC TV 18 by sending a tagline on the email address flashing on your screens, and you stand a chance to attend the marquee event. Welcome back to Power Breakfast on CNBC TV 18. Now it's time to get you what's happening in the world of commodities. For that, we have Manisha Gupta joining in with us, as always. Good morning, Manisha. What's interesting today? Hope gold is not shining as bright.
No, it's not. Not even silver for that matter. Actually, when you look at the overnight markets, we did see silver decline by 1.5%. Gold is declined below $4,000 an ounce. Remember, we did see a record high of 4,382 in the month of October itself. Well, the reason being that you have the dollar index holding at a 3-month high, also with the US and China arriving at some kind of a truce, also had led to safe haven buying going out of the markets there. And then you have the US payrolls data coming in, and ahead of that, there is a bit of a profit taking that we are looking at in case of gold. Copper also saw a decline of 1% overnight, but that is exactly where the losses end, because the other metals have actually done quite well. Zinc, for example, is trading at an 11-month highs above $3,100 an ounce. The treatment charges for zinc have risen to $87 versus a negative in the previous year. You also are looking at aluminum futures trading at a 3-year highs because of a cap that China has put in sense of production there. The markets also have seen crude oil prices come off its highs, with OPEC pausing output hikes for the first quarter of 2026, and the fact that you're looking at members yet to restore 1.2 million barrels per day are some of the factors that seem to be putting pressure on crude prices.
Okay, Manisha, thank you so much for the update there in the world of commodities. But shifting focus to key earnings that are expected today, we have SBI that will be reporting its Q2 FY26 numbers. What are we expecting this time? Gaurav is here for that. Good morning, Gaurav.
Well, good morning. First, when we look at advances, now for SBI, people are expecting around 10% growth on a year-on-year basis in terms of advances and deposits. There also we will see growth in line with advances around 9% on a year-on-year basis. And on the back of that, when we look at net interest income, we are likely to see around 2% fall on a year-on-year basis. And the reason being that there will be some pressure on net interest margins. When we look at PPOP, which is pre-provisional operating profit, we are expecting around 6% fall on a year-on-year basis because treasury income, now that will be a missing part in this quarter specifically because of the treasury movements that we have seen so far. And when it comes to profit, now we may see around 7% decline on a year-on-year basis. Now, when we look at net interest margins, SBI is one of the banks where people are expecting around single-digit decline in net interest margins in this quarter in the range of around 4 to 6 basis points. And another key point, a key positive point here is that the credit cost. Now, specifically when it comes to asset quality, for SBI, there wasn't any problem, and people are expecting the scenario to remain the same. Asset quality is likely to improve on a sequential basis. We may see around 4 to 5 basis point of improvement in credit cost. Now, what is the key thing to watch out is the net interest margin trajectory and how the commentary is going to be on net interest margins. And second is the commentary on growth. Remember, SBI is the biggest bank, and despite being the biggest bank, people are expecting around 10 to 11% growth on a year-on-year basis in line with the system. So that is something that we will be watching out from the management. But for now, from the results perspective, we are not expecting any negative surprise and a stable result for this quarter from SBI.
Stable result is what we're expecting in Q2 FY26. We'll keep an eye out on that one. But M&M, that's also set to report its Q2 FY26 numbers. Let's go back to Sudarshan, who's here to tell us what are we expecting from M&M then. Good morning.
Good morning, Vinny. So we are expecting a mixed set of earnings from Mahindra & Mahindra. Why mixed? Because revenue may see a healthy growth while margin may come under pressure and may come below 14% after several quarters. Revenue growth would be supported by healthy auto volumes that we have seen both on a sequential basis as well as year-on-year, while for the margin, EV mix, rich EV mix may drag margin, and that will offset the margin uptick that we'll see from the tractor business. So overall profit is seen rising 5%, revenue may see a growth of 25%, EBITDA too may increase by 21%, and margin can fall to 13.9% from 14.3% that company had reported in the same quarter last year. And in resultant, realization is seen falling 1% year-on-year and may increase almost 5% on a sequential basis. What exactly would be looking at the management commentary, what company says on the new launches, because we are expecting company to make some of the new launches in this month also, and also if there is an increase in the FY26 outlook. These are the two things that will be in the focus in management commentary.
Okay, Sudarshan, thank you so much for that. We'll keep an eye out on the commentary that comes in from M&M as well. But moving on, Aditya Birla Group Chairman Kumar Mangalam Birla wants his group companies to be in the top 2 across industries. His business interest spans metals, cements, paints and retail. Speaking from the sidelines of the CNBC TV 18 IBLA jury meet, he outlines his vision for the conglomerate. Listen in.
I think being in the top 1 or 2 in the industry that they are in, with return on equity, that's specifically each one's target. Largely, that's how we work.
Are you particularly chuffed about some of the forays that you've made, especially in the consumer space? With the GST cuts that have happened, that would boost consumption and the money that people have in their hands. Have you seen that on the ground?
Yeah, I think they had a very good Diwali. I think both paints and as well as retail, jewelry retail. It's our first time with such sort of hardcore consumer brands, and it's good to see them having taken off so well.
Right. You speak about your consumer brands, etc. The one thing that we have to learn from you, and what according to you would be the Birla playbook of entering and disrupting a category which has had a lot of incumbents. You've done that multiple times in the past, but now as well, with the consumer foray that you've made in the kind of categories that you've entered, including the likes of jewelry and paint, what according to you would be the Birla playbook?
I think the first is very thorough preparation and understanding clearly what it takes to win in the industry, what our levers to win would be, and then executing to precision almost. I think it's basically both of these. It's understanding what ticks for the customer. Consumer insights are very important to build a business model around that.
Okay, with that, we are absolutely out of time with this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.